Welcome to video 14 in the Money Education Financial Statement Preparation and Analysis Software Instructional Video Series. As a reminder, videos 1 through 6 in the series provided guidance on how to get started using the software and data entry to build the base case. And in videos 7 through 11, we covered how to make recommendations in the software. In videos 12 and 13, we covered long-term goals, calculators, and the Goals Report tab. This bonus video will cover advanced recommendations, including refinancing a mortgage, using a home equity line of credit to refinance debt or fund other expenses, and selling assets to fund the cash account. Let's start with the usual process where we're going to log in. Click that we've read the terms of use, and we will select a case. I'm going to use the file that I was working in to make recommendations in the previous videos and duplicate the case. Then I will save it under a new name to indicate that this is the file for advanced recommendations. We'll save the name, and then we will go ahead and load that case. First, let's take a look at how to refinance in a mortgage. As you recall, our example clients did already have a mortgage that we listed on the Expenses and Liabilities tab. It's important that you do not enter the new mortgage as a new record. You always want to make it a recommendation against the existing record so that the software recognizes that it is a replacement for the old mortgage and not an additional mortgage. So I'm going to select the existing mortgage, and let's say that the example clients decide that they're going to refinance this mortgage and they're also going to pay it down slightly. So what they want to do is they actually want to refinance a balance of $180,000, and we can see here that the current balance is $197,701.55. So they're going to use $17,702 from their money market account to bring the refinanced mortgage down to $180,000. Let's say the new mortgage is at 3%, and it will be for 120 months. Now, at this point, I want to go down here and click on Save Recommendations. So we can see now that the new mortgage shows up as a recommendation right below the old mortgage. Now, remember, we were going to pay down the mortgage by $17,702, and we're going to use the money market account for that. If I go to the Assets and Savings tab, one thing you'll notice is that there's nothing here yet to show that I paid down $17,702 of that mortgage from the money market account. So just as a real client would need to bring a check from the money market account to the loan closing, we have to ensure that we show the necessary withdrawal from the money market account to make that payment. So I'm going to go back to the Expenses and Liabilities tab, and I'm going to select a one-off payment from Assets. The expense type will be Other. We can keep it as Joint, and I'm going to use a description of reduce mortgage balance to refinance. And remember that our payment was $17,702, and I need to choose the account that I'm going to pay from, which is the money market account. So here I will click Save Recommendation, and we can see that the payment shows up on the Expenses and Liabilities tab. And if I go to the Assets tab, we also see that coming out of the money market account. If I go to the Reports tab, and I look at the balance sheet for the current year with recommendations, I can see the changes in the cash account and in the mortgage. If I look at the balance sheet 1 year from today with recommendations, you will also notice that the money market account now shows the adjusted balance. It started at $100,000. I reduced it by $10,000 in a prior video to pay down credit cards, and then I reduced it again by the $17,702 for the mortgage refinance. That remaining balance then increased by the 9.77% return for a balance 1 year from today of $79,362. The second advanced recommendations feature we want to show you is how to use a home equity line of credit to provide funds to refinance debt or fund other expenses. Let's pretend the example clients want to take their parents on a special vacation for their 50th wedding anniversary at a cost of $18,000, and they plan to pay for this expense by taking out a home equity loan. On the Expenses and Liabilities tab, I'm going to create a new expense as a debt payment. And for the expense type, I will select Other. Notice that when I select Other as the expense type, I get a new recommendation box at the bottom of that left navigation area. And this is to create a loan to fund the cash account. This is telling the software that I'm creating a new loan and I have a plan for spending the money. So I'm going to use the description of HELOC for anniversary trip. To remind me what this is for. And we'll put in an amount borrowed of $18,000. Let's say this is at 3.25%. And we'll make it for 84 months. Now I'm going to use that new button to create a loan to fund a cash account. This gives me a pop-up box to tell the software which cash account I want to fill with the loan proceeds. I'm going to use the checking account, and I'll click on Create Loan to Fund Cash Account. Now on the Expenses and Liabilities tab, I can see the new HELOC, and on the Assets and Savings tab, I can see the $18,000 that's added to the cash account. Now I need to show the extra expense for the trip for the anniversary. So I'll go to the Expenses and Liabilities tab and enter a one-time payment from Assets. The expense type will be Other, and I'm going to call this Anniversary Trip. The one-time payment is for $18,000. Notice that when I click the drop-down box to select the account to make the payment from, it's giving me the current account balances of each of the available accounts. The checking account balance was $15,000, and then I added the $18,000 from the HELOC for a total of $33,000. And I'm going to click Save Recommendation. And we can, again, see the one-time payment on the Expenses and Liabilities tab. And if I go to the Assets tab, I will see the $18,000 for the anniversary trip coming out of the checking account. The last advanced recommendation we want to look at is how to sell assets to fund a cash account. So on the Assets and Savings tabs, I'm going to give the example clients a new asset. Let's say that Mr. Example has a coin collection. And let's say the coin collection is valued at $13,000. So I will then save this asset, and we see it show up on the right-hand side. Now let's say they decide to sell a portion of the coin collection to pay down some debts. The software does not allow you to retire debts against a personal use asset. So just like real life, the client first has to sell the personal use asset and deposit the cash into the checking or money market account, and then they can use those funds to retire the debt or perhaps they plan to use it for a one-time purchase or expense. So I'm going to open the record for the coin collection, and I'm going to click on the button to Sell Asset to Cash Account. Here I can enter the sale amount. Let's say I only want to sell $8,000 of the coin collection. I have a box where I can choose where I want the money to go, and I'm going to select the checking account. Notice that I also need to fill in the remaining balance. This might apply, for example, if the client sold the asset for a loss and the remaining balance would then be zero. In this situation, I'm going to assume that the remaining balance is actually the remaining $5,000 value. He's not selling at a loss. And here I will click Save Recommendation. On the right side, we now see the recommendation to reduce the coin collection and increase the cash account. If I go to the Reports tab and the balance sheet for the current year with recommendations, I again see the reduction in the coin collection and the increase in the cash account. Looking at the balance sheet 1 year from now with recommendations, we see the checking account identified as an adjusted balance. The amount is the original $15,000, then we added and subtracted $18,000 for the anniversary trip, and finally added the $8,000 we deposited from the coins for a total of $23,000, which then grew at the portfolio rate of return of 9.77% to give us a checking account balance of $25,247 1 year from today. One important note on these advanced recommendation features: you have to create your implementation plan in a logical order. If you plan to sell off some assets to reduce debts or make one-time payments, you have to sell the assets first, then make your recommendation to pay for those items. So let's go back to the Assets and Savings tab for a moment. Notice that if I click on the entry for the brokerage account, I have a message in the lower left corner telling me that this entry cannot be altered since it already has recommendations against it. Recall that we paid to fix the roof, the recommendation entry right below the brokerage account, and used the brokerage account to pay for that. If I wanted to sell part of the brokerage account to fund a cash account for other needs, I have to delete the recommendation to fix the roof. Then I can sell off part of the brokerage account that I want to sell, and then I can re-enter the payment for the roof. So let's go ahead and walk through this. I will delete the payment for the roof. Now when I click on the brokerage account, I no longer have that warning in the bottom left corner. So I am actually able to sell a portion of this asset to the cash account. And let's say I want to sell $25,000, which would bring my remaining balance to $175,000. And let's say that I'm going to deposit this into the money market account. So I will click on Save Recommendation. And we see that we have sold a portion of the brokerage account, and we've got the lower balance on the Assets and Savings tab, as well as the deposit to the money market for the $25,000. Now I can go back and create my one-time payment to fix the roof. And I can use the brokerage account. Notice that when I select the account to pay from, the drop-down provides me the current balance in each account. I'm not going to save this yet. I want to show you something first. Let's say instead of $15,000, the roof cost $60,000. When I look at my drop-down box with the account balances, notice that the checking account only has $23,000 in it. if I select that account and try to save the recommendation, I will get an error message down in the bottom left corner that tells me the payment exceeds the asset balance. In other words, I would need to go fill that cash account just like in real life before I can make the payment from that account. The software will not let you overdraw the checking account. So what I need to do is go back and select a different account to pay from, or sell some assets or add an additional loan to fill the checking account with first. We wanted to do this from the brokerage account, and it was $15,000, so I will go ahead and re-enter that entry as we had it before. And now I can see that the roof is fixed, and on the Assets and Savings tab, the brokerage account has been adjusted for the $15,000 for the roof. This concludes our bonus video on the use of the Money Education Financial Statement Preparation and Analysis software for making advanced recommendations.